What's going on, traders? Hope everybody had a great weekend. It is Sunday, June 25th, and we'll be doing a little look ahead before our plan for Monday, the 26th, coming here to the end of the month. Before we get into it, though, of course, this video is for educational and entertainment purposes only. And we're starting off with the weekly chart here, but before we get into that, let's take a quick look at the scheduled economic calendar for this week. See if there's anything that we want to keep our eyes out for. Let's see here. I really don't see too much. We've got initial jobless claims on Thursday, the 29th. Other than that, it looks like a pretty quiet week. University of Michigan sediment Friday, the 30th. Well, those are the only real things that's kind of catch my eye overall. So looks like we're pretty clear as far as data is concerned. I'll be posting this schedule up on my Twitter @_SharkTrader for any of those who are interested in. So Friday, we were down in the markets, down about $3.30, 0.76% in the red. Final print being 433.21. And we're taking a look at the weekly here, printing in a bearish inside weekly bar here. So we are right in the middle of this last week's green candle, and really, it's tough to surmise. We're kind of at a breaking point here where the market could either reverse or actually really start to see some selling. It's kind of at a do or die point for both the sides. But really, we have been talking about this downtrend that has been created over the last couple of sessions, and so we are monitoring that. And have talked about being a little bit short-term bearish right now, but we certainly are still, at least on the weekly here, far away from the moving averages. So although that can be looked at as a little overextended, the momentum, at least from the bigger picture, of course, is still in the bull case, right? So yeah, not too much to report here on the weekly, but I thought we would start off with it. And interesting just to note that inside bar bearish print. So the first red week in, let's see here, 1, 2, 3, 4, 5 weeks of green, finally seeing a red candle print on the week. So let's go over to the daily, though. A little bit more to report on that front, being that we did close under the daily 9 moving average at 433.85. So we have closed under that, but not by much, only about $1, dollar and some change close under. So that easily could be recaptured, but we'll have to see. And now I'm sure eyes, if they are able to stay under, eyes are probably starting to peak at that 20 period moving average right around the low 430s, sitting right now at 430.38. But let's see if that moves or comes down or moves up as we come into the first 2 trading sessions of the week and see how that plays out. But certainly that can act as a magnet area, and make sense. That 430 area is definitely a bear target that we have been watching, and that I will reiterate again in a little bit. So yeah, as far as the daily is concerned, yes, definitely interesting that we did close behind, but not under that short-term moving average, but not so far away that really gives me a total sure confirmation of being under that. So we'll have to see how the next few days play out, because we could just as easily see a pop-up above it. And I'll show you something interesting, at least also from a psychological point of view as well, here in a moment. Now, pardon me. Excuse me. Oh my god. Excuse me. Sorry about that. Okay. So We are seeing that weakness come into the Momo. We have been watching that, those overbought conditions that we were mentioning over the last few sessions as we started to get really hot into this area, and finally seeing that momentum start to peel off. Now we were looking, let's just take a quick look back on the weekly. Oh, it's still pretty green here on the weekly, and so that does suggest that chances are, and we are still pretty extended up here, so we can see some potential cooling off here starting to happen in the weekly as well, and I want to keep an eye on that, but definitely still overbought there. Not too much else I want to go over as far as this chart is concerned. Nothing really has changed here on the fibs. I'm going to take these two levels off. But definitely we'll be keeping an eye. Of course, we talked about that 430, but bigger picture here, that 428, just under 429, 428, 95, definitely going to be a big area. And if we start to get under that, I certainly would be expecting to see some more selling coming into the issue, and depending on when it happens, of course, this megaphone pattern that we were watching during that consolidation, we'll have to see if we get any confluence, if we start to break under, in the next couple of, well, I guess wouldn't be until July. But we'll have to see if it breaks under. Then I'm really going to need to see it break under this trend line and get back under, and then we can look for the real sells. But certainly getting under that area would be a bad sign for the bulls. So let's go a little bit more in depth and kind of talk about what we're looking at for tomorrow. But actually, one thing I did want to this wasn't shown before. One thing I did want to bring up pretty quickly. Okay, this one. We haven't looked at the liquidity in a little bit, and I think it would be a good time maybe to peek at some of this bigger picture liquidity as we start to sell off here. All right, not too much to see on the daily. I thought maybe there could be something here that we could see, but not too much on the daily. Let's just work our way down. Okay, not too much on this one. Let's just peek at the weekly for fun. Okay, not too much here. Okay, all right, this is interesting, and it does kind of line up with a little bit of the other, some of the other things I am going to say. In that this 437 to 435 area is going to be where I really want to watch, and really the 435 for me, but let's just mark off this zone, and I think this would be an interesting area to watch to see if they can retake, if bulls can retake this this area here, right? And let me get it a little bit more close to the actual price. Okay, so this is telling me 435 in the 60s, right? I really had the 435 area, but this general zone here. So it comes down from 435 to 435.64, this general zone. If bulls can recapture this, we can start to really have a little bit more confidence in some more bullish momentum, possibly to come back into retest this breakdown candle here, this POP, and then we've got another one just above around 437.25, 33, excuse me. So we'll definitely be watching that as some potential upside targets if we do start to break above this zone here. So I'm just going to mark them off. Good to just have a visual of that. So right here, and we'll see if they are actually able to do it. Now here in after hours we have started to come up a little bit, but it's pretty slow, not too much cooking, but you can see this bar here going with the futures, right? So let's go ahead and look at what I really wanted to show you, and we were watching oops, turn this off Okay. Now we've been watching this range and these targets here to the downside. First target for the bears, second target, third target, and so something I wanted to mention, and this is the range here that we were talking about earlier, that we were watching it get established last week, and we rejected, of course, right here at that 50% retracement into the range, came back down, tried to make another push up higher, came into that 435 area, and then pushed back down again and towards the end of the day as we kind of formed a bit of a rising wedge there. And we've been watching about the high, lower high, lower high, lower high, lower high, again lower high. So we know the trend overall. And yes, there still might be long trades that are presented to us. Like this trade I actually did take long here on futures and on some options. But you can see both sides got paid off nicely with right at the end of the day we flushed down and actually made a new low overall. So there still could be those long trades, but you just have to be aware that the sentiment overall is still technically short-term bearish, and we're going through a retracement. So there could be any time where you get a candle like this that just drops you down middle of the day or whenever it happens. So just being aware of that you are swimming upstream, so to speak, and be ready for something like this to be possibly print. And if you are taking those longs, it's not time to be oversizing or anything like that. The majority trend is down currently. But I thought I would mention this, and this is kind of getting a little into the psychology of things. Now, there's two ways I could look at this, right? And it really goes into, I think it's a testament to when we talk about having a bias in the market, right? And that bias can also make you see things that either aren't there or are there. And I can with confidence say that this, right? Well, let me get a little bit better. That right now we are just in a straight downtrend channel. Okay, let's bring this over just a little bit. That right now we are just in a downtrend channel, right? A couple of fake breaks here, a couple little wicks here, but multiple touches around here and here and here. So we are in a downtrend channel, right? However, this, putting it up here, bringing this down like this, doesn't give us a downtrend channel. I mean, it does definitely give us still the downtrend that we want to watch, but this now is more looking like a falling wedge, a descending wedge, right? Which would be a bullish reversal pattern. So I think that's an interesting lesson, or something that is worth pointing out, because if you're bullish, you could ride this and look, hey, we hit this third target, now we're coming up, and this is a reversal pattern. Or you can say, no, we're just in a downtrend channel, just depending on how you want to draw it. So really, I think it's a nice illustrator of that, how you let your own bias kind of affect the way you're going to chart something, and just to be mindful of all those different ways you could look at it, and having that awareness, I think, can help you avoid some of those pitfalls of being stuck to just simply one point of view, which I think some people, and I've done it too. You just buy the dip that keeps on dipping, and you can't let it go because you're bullish, or you keep shorting the pops and it just keeps rallying. So those are definitely things to be able to see both sides of the the argument that I think can really help you. So with that being said, as I was talking about earlier, now it's going to be Friday's highs, right? The 435 and this bottom area when we were looking at the liquidity earlier, it was pretty much that 435.60, right? And these levels have been here, that we've been looking at these ones for, since Monday pretty much. And now we're getting a nice confirmation when we did take a look at that liquidity earlier, right? Where was it? It was, whoops. What did I press here? Phrase squeeze. Okay. When we were looking at that liquidity earlier, where was it? Did I delete it? Oh God, no, I didn't. I think I put it on this one. Sorry. Right here in this 435 to 435.60, right? We just did that, and that was already on our zone from before. So it's nice to see that confluence there, and with the zone that we already had mapped out for us, and gives us a little bit extra confirmation that we know that that level is going to be important overall. All right. So if we start to break over this area here, that's going to be the first line in the sand that the bulls are going to need to recapture for moves up into that potential 437. But the 437 is going to be that next big area that we're going to need to see broken over for the chance to come back up into 438 in the top of the range here. If we get over this 430, the 437, then yeah, we're going to be looking for 438, 438.25, then closer to 439, and then if we break over that, we're going to be looking back at that 400 again. Bears are going to want to keep us below Friday's swing high. Hopefully they would want to reject us here and then drag us back down under the 433, hang us out down here, and then break us down lower under this 432. And ultimately, I think that if they start to break that down, they're going to be targeting down here towards that 430 area, which I was mentioning earlier, will be important and something that we want to watch out for. So I definitely think that that's an area that it would be the ultimate target for the bears, and we'll have to see if they get there. Do I know what's going to happen? No, I have no idea. But all I know is that if we start to get over these levels, I'll be looking a little bit more long, and if I'm under, then the shorts can still be potentially in play. So yeah, that will be interesting to see how this plays out. Maybe we something else to potentially look out for. And I guess the risk to reward really isn't too favorable, but if we start to break over, come back here, retest the downtrend, and then make a move here, but I probably would feel a little bit more comfortable being over that 436, that high 435 area, being over here before really having that extra confidence in the long. Again, it doesn't mean that the long trades are, potentially might, aren't there. As I was saying, I took a long trade. I captured this move on Friday. So they still might be available to us, but we just have to, again, be aware of the prevailing trend in the market right now, and that bigger, at least medium term, that the bears are in a bit of control overall. Last thing I wanted to go over here, day trading fibs, before we close it out. We are hanging out right here, right at the 61.8, and so we'll be watching to see if this general 432, 432.67, 432.50, that general area holds. If they start to break it down, then we'll be looking, for these lower prices to come down, and this little bit bigger picture, but nice lineup here. I mean, it's not exactly 430, but 429.63, pretty close. We could see a fake break of 430, comes down, taps this area, then gets bought back up, right, and then recaptures 430, and that's totally possible. So I would watch out for that scenario as well. This whole area probably will be pretty well defended if we get down into that zone. But ultimately, I do think that if the bears start to prevail, that we would probably going to be heading down for a test of that general area. So I think that's worth looking out for overall. Other than that, I don't know if I have too much more I need to go over. VIX has just been really disconnected. Of course, we had VIX expiration a couple of, I think it was last week, but VIX just really, just volatility compression here is just getting really extreme. And I think I saw something that we saw the VIX the lowest it's been in like a long time here. I don't remember exactly what the post was, but what was this, 2018? I mean, we're the lowest that we've been at least in three or 4 years. I mean, it's very interesting, this kind of disconnect in the markets with VIX and where we are. You'd figure VIX would be a bit higher right now. Maybe in the 17s or at least in the 15s. So I'll be watching this and see, if there's going to be any type of momentum or anything going on here. But it seems like it's a little bit broken recently. So I still watch it. I still think it's valuable to watch. But it's been interesting to see it, how it's kind of been reacting over the last few weeks. So all right, guys, well, I hope you find this helpful. Again, if you found the content and the video, the plan, the information helpful, really would appreciate, means a ton to me if you would subscribe to the channel, hit that like button, and of course, if you want, turn on those notifications. That way you're alerted every time we post a new update about the markets. I hope you have a good rest of your Sunday, and take care.